Good evening, everybody. I was trying to get myself together. I was trying to get myself together. I think I finally did that. How y'all doing this evening? Shout out to everybody that's putting up. I appreciate y'all for putting up. Hanging out with your boy. As y'all can see, I'm still getting myself together. Thought I was prepared, but don't seem like I was. But I will be shortly. I don't know if it's just my eyes bad or my thumbs getting fatter. Cause when I be typing on my phone, I promise you it be typing all the wrong stuff. And then when I be hitting when I be typing, it be hitting some of the what's the names, man? The like replacement words at the top. But like, man, if you don't get out of the way. All right. Good evening, everybody. First of all, if this is your first time tuning in to Tim's Tidbits, first of all, can y'all hear me? Let me make sure y'all can hear me. Make sure y'all can hear me. Mic check. Yes. All right, y'all can hear me. Man, my computer, it be sounding that loud when I be clicking on stuff. Y'all be hearing all of that? I just unmuted that to listen to it. All I heard was that would drive me crazy. Why y'all ain't never tell me how loud the clickety click was? All right. Now, if this first time tuning in to Tim's Tidbits, please allow me, as I untangle my headphone cord, to say welcome. If it's not the first time tuning in to Tim's Tidbits, I still want to say welcome. And I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just Big Spider if you don't hablo Espanol. And you are now in tune to another episode of the Intraday Price Action Recap. Yeah. Hey, man. Shout out to Gang, man. Speaking of the Gang, if you want to come hang out with us in the Gang, there's a link in the description. And there's a link pinned to the top of the chat where you can click on it and choose the tier of your choice to come hang out with us in the Discord community, right? Here's what you get with the different levels. That's enough for the sales pitch. So if you want to be a part of the Gang, click on the link that's pinned to the top of the chat or click on the link in the description below and come hang out with us in the Gang. It's a fun time, man. It's a fun time. It's not like your typical competitive Discord where everybody trying to outdo each other and everybody in there all day and night posting about their profits and their latest setups. Man, it's all about trying to figure out how to read this thing that we call price action and put it to use in day-to-day activities. Be it day-to-day, swing trading, whatever kind of trading you do, we try to figure out how to read this price action. I share my thoughts on, these things they call ICT concepts, and we try to get to it, man. We try to apply it to our trading strategies. Let me see who all up in here, man. Y'all drop something in the chat so I can, see who up in here. Right? I see C-Walk up in here.
What's up, there?
What's going on, C-Walk? I see Lump up in here. I see Yolanda up in here. Shout out Yolanda. I see Here to Learn and Share up in here. Something. You're funny. Hey, I see Kim up in here. I see Honey. What's up, Honey? Honey up in here. I see. You say you hear me now. You couldn't hear me before, Lump? Check, check, check. Y'all, anybody having any issues hearing me? I see a message saying that my brother couldn't hear me. Can y'all hear me? Hello.
Clear.
Okay. All right, then, Lump. Cheap cell phone family. All right. We got Thomas. What's going on, Thomas? We ain't seen Thomas in a month of Sundays out here, man. What's going on, Sage? Hola, amigo. What's going on, Sage? What's going on, Felicia? Right? That's all I see in the chat. I see more numbers than I see names, but hey, we're going to go ahead and get to it, man. What have we been talking about? I took some time off. I took off Friday, Saturday, and Sunday. Right? I took off Friday, Saturday, and Sunday from doing any live streams. Man, my shirt looked like somebody snatched me up by the collar. What's going on with that? Got on the old man neck shirt. I took off Saturday, Sunday, and Monday from doing any live streams. All right? So, somebody catch me up. What were we talking about? All right? What were we talking about? Who remember what we was talking about? All right? Nobody? Nobody? Nobody remembers? Ooh, ouch. Ooh, ouch. Ouch. Y'all know what that is? Y'all know what happened just now? Ooh, ouch. Ooh, ouch. Seawalk, Yolanda. Y'all know what just happened? Huh? Y'all know what just happened? Ouch! Ooh! Y'all know what happened? What happened just now? Huh? Honey! Honey, you know what happened just now, honey? What happened? You know what happened just now, honey? Ouch! Ooh, ouch! Ouch! Y'all don't know what that is? Y'all want me to tell y'all what happened just now? Huh?
Yeah, go ahead.
Huh? My feelings getting hurt. Y'all just hurt my feelings. My feelings hurt. don't nobody want to answer. My feelings hurt. Ouch. Ooh, ouch. My feelings hurt. Don't nobody want to answer. What were we talking about? Huh? What were we watching? And don't say price. Huh? What were we watching? Huh? Remember? This is a monthly chart here. Right? It's a monthly chart. What were we watching on the monthly chart? We said we had come down to our... Man, this is not letting me write well. Man, this is not letting me write at all. All right? Said we came down to our monthly anticipatory reactionary points. Right? We had a monthly bullish order block here. Right? We had a monthly bullish fair value gap here. Right? We had come down to those monthly anticipatory reactionary points. Right? And we were looking for sensitivity in the wick of the order block. We came down and kissed it. Right? March came down and kissed it. Right? That kissed that wick. March came down and kissed that wick. So, all right, and we also was watch the first PD array right now, because this is the deep. This wick right here went the deepest. Right, that wick went the deepest right there. That wick went the deepest right there. Right, this is the first wick you get to there. Right, that's the first wick you get to there. So that's the first PD array you're watching. Right, and then this wick over here went the deepest. Right, so that one went the deepest. Right, so we're watching the first wick that we came to, which is September's wick. All right. What's up? What's up, 80? What's going on, 80? Right. We watching the September's wick, consequent encroachment. Now remember, what did we say? All of these are monthly time frame anticipatory reactionary points, right? So we're looking at how this March candle closes in reference to those anticipatory reactionary points, and we have 10 trading days left in this month. 10 trading days left. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We got 10 days left, right, in the month of March to see how this candle closes in reference to these discount PD arrays, the order block, the fair value gap, and this consequent encroachment, right? The monthly chart is in a buy program. It's got a bullish bias, right? And it's in a buy program, right? So we're looking for this retracement. We have been looking for this retracement, right? We want to see if we was going to get a reaction here, right? We got a small reaction there, right? As you know, as would be expected. Small reaction there off of these PD arrays. But these PD, I think the equilibrium was around here somewhere. If we get us a Fibonacci tool, we can check that, right? No, that was for this range here, right? For that range there, right? That was around there, right? For equilibrium was there. And then now these are the discounts for this latest price leg there. And then the entire dealing range from the low to the high, right? We're in a discount for the entire dealing range, right? This is what's up? Is that Chloe or Campbell out here? What's going on? Chloe, Campbell.
Loud.
Right? Chloe, Campbell, Carter. Somebody, I hear somebody. What's going on? How y'all doing? Y'all hold on for a second. I'm talking to my folk. What's going on? How you doing?
Good.
You doing good? Who is this?
It's Campbell, and I'm about to scare Connor and Chloe. I see.
Wait a minute.
What's up, Campbell? What's going on, Campbell?
Mute.
How you doing?
Oh, there it is.
Good.
Okay, that's what's up. What you about? What you going like soccer practice or something? What you going? Where you going?
We're going to do soccer practice
Okay.
because
Girl, it's taking you too long. Say bye. Say nice talking to you.
our coach you Carter coach, so you have to do it with Carter. So bye.
All right, then. Go deal with Carter, then. That's all right. Go hang out with Carter and Carter coach. All right, I'm back, y'all. Now, right, so we're in a discount for the overall range, right? So from the lowest low to the highest high of the entire dealing range that we're looking at here, right? This is the discount order block that we was looking at. This is the discount bullish fair value gap we was looking at, just so you can see it in the sense of the dealing range and the premium and the discount of the area, right? What do? We sell in a premium, right? And we buy in a discount. Now, we just don't arbitrarily buy when it comes to the discount. We have to have a reason for buying. We don't arbitrarily sell when it goes into a premium. You have to have a reason for selling, okay? Now, we study the price action to figure out what does the algorithm most likely want to do after it gets to our anticipatory reactionary point. That's why we look for how the candles are going to react to the PD arrays on that time frame to get clues. Now, we got 10 days left before we figure out what it's going to do on the monthly time frame as far as the signature is going to leave us. On the weekly time frame, right? We were watching the weekly bullish order block right here, right? That's the weekly bullish order block that we was watching. Why were we watching that weekly bullish order block? Right? Because it gave us confluence with our monthly anticipatory reactionary point. So we want to see, how do we close on a weekly basis in reference to this weekly bullish order block, right? Last week we closed above mean threshold. For those who don't know what mean threshold is the 50% of a block, order block, breaker block, mitigation block, any kind of block, right? That's not an imbalance, right? We're looking at 50% of being the mean threshold, right? 50% being the mean threshold. And we closed above the mean threshold last week, showing that we're respecting this bullish order block, right? And that went in line with the bullish narrative of the monthly time frame. Right? We got a bearish break in market structure when we traded below these lows right here on the weekly. But whenever we have a higher time frame PD array that requires or will allow the higher time frame to trade down to a discount, the shift in structure is expected on the lower time frames. Right, so this lower time frame bearish breaking market structure was anticipated because we were anticipating price to come into the monthly order block after it didn't stop at the equilibrium of this range we was watching. Right, we never try to pick the bottom. We said, okay, it wants more. Let's see what there is out there. And then looking at this entire range here, we see that we have discount PD arrays that price needs to come to. And all of that fell in line with the idea of moving into correction territory, right? All the way down to kiss that order block. How the algorithm, how it came down and kissed the wick. Remember, it came down there. That was a 14% pullback, right? That was almost 15% pullback. That went in line with the whole narrative of finally getting a correction, right? The NASDAQ moved further into correction territory than the Dow and the ES, right? Since the NASDAQ moved farther into correction territory than the Dow and ES did, right? Can somebody tell me what we call that, right? Without, just think about it, right? We're used to looking at the chart and seeing it, right? But when you want to be able to understand what you're seeing. So since the Dow since the NQ moved farther into correction territory, look at Kim pulling up with the hard-hitting answers, man. Shout out Kim. Shout out Kim for pulling up with the hard-hitting answers. We call that divergence. And the type of divergence that is called bullish divergence. Why is it bullish divergence? Because it's happening at the lows. The NQ has made a lower low as far as percentage-wise, pulling back than the Dow and the ES, right? Than the Dow and the ES. And if we look at the Dow, right? Let's go over here. Let's just put it on weekly candles, right? If we look at the Dow, come here, right? If we go from the highest high to the lowest low on the Dow, right? It's just shy of 11%. Right, that's correction territory. The Dow moved into correction territory. Right, today we're at a little over 8%, but we went as low as 10.8% off the highs. That's correction territory for the Dow. Right, if we go over to the ES, right, we go over to the ES and look at the ES from the highest high to the lowest low, and from the highest high down to the low that we just made, the ES, we went 10. It's almost the same as the Dow. The Dow was 10.81%. The ES was 10.84%. That's the lowest. That's correction territory. And today we're right at 8% on the ES, right? We're right at 8% right now as of where the price is right now, right? If I put it on the daily chart where we closed at today, yes, right at 8%, right? So, that's bullish divergence, right? Because the Dow and the ES made a lower low, right, than the NQ. We're talking percentage wise. Remember, price is fractal. Everything about price, you know what I'm saying, you can apply the concepts to it, right? And then right now, what we're looking at here, this is September's low, right? This is the that's the September low right there for the ES, right? And if we look here from that low, right, over to where the ES made it to, right, didn't make a lower low as far as the September low, right? This is the September low here, right? The NQ, come over here. I'll just use this line right here. Oh no, I'll leave that line there. I'll use another line. The NQ, right? Right there, boom, didn't make a lower low, right? And then if I come to the September low here on the Dow, right? Look there. It did make a lower low as far as price-wise, right? So you see in percentage-wise, we had bullish divergence, but the NQ is the one that went the deepest. It had the largest pullback, right? The NQ had the largest pullback, which makes sense. The NQ is more volatile. They have the swings tend to be larger in the NQ, right? It's a thinner market than the ES, right? So it tends to move. The moves tend to be a lot larger, right? Same thing with the Dow. You know what I'm saying? The moves tend to be a lot larger because it's a thinner market, right? And so, but when it comes to price structure, the Dow is the one that had the deepest pullback for price structure wise. The Dow made the lowest low structure wise. The NQ made the lowest low percentage wise, right? So you can always, right? You can. What's going on, Marco? Right? What's going on? What's up, Corinne? What's happening? Right? You always want to be able to not only visualize the concepts, but understand what the concepts mean. Understand what you're talking about when you say, hey, I see divergence. Hey, I see price coming up on an order block. Hey, I see understand what it means. And once it does that, right, what are you looking for next? Right? What are you looking for next? You always want to know that. Now, where we are now for the NASDAQ, right? We've come to our anticipatory reactionary point, right? On the weekly time frame, so far we're respecting the bullish fair value gap, right? I mean bullish order block, right? We're respecting the bullish order block. Not only are we respecting the bullish order block, right? Something that we haven't spoke about yet. There is a balanced price range here, right? That we're also respecting. Now, we might have talked about the balanced price range, right? I think we might have talked about that because it's in the same. It's roughly in the same place as the monthly fair value gap, and I believe that's why we changed the monthly fair value gap to blue, so it wouldn't be two green fair value gaps there. I think that's why we changed it to blue, if I'm not mistaken. But anyway. So we're respecting the bullish order block, right? So in the sense of this showing agreement with the higher time frame, right? So the first thing you want to do is look at your bullish argument because it's agreeing with the higher time frame, right? So those that was on this morning's tape reading session, it's okay if you answer, you know what I'm saying? But if you wasn't on this morning's tape reading session I would especially like for you to answer, because I know that, you know what I'm saying, you haven't been influenced with my thought process at all, right? So now that the weekly is showing that it's showing a signature of agreeing with the monthly bullishness, right? What would you want based off of what we're looking at here? I'm not. I'm not laughing. I'm not laughing at. I'm not laughing at you, career, but that just caught me off guard. That just caught me off guard. Go ahead, Yolanda. You was gonna say something. Go ahead. What was you gonna say, Yolanda? Oh my goodness, that caught me off guard. For those in the Discord who didn't see what Corinne put in the chat, Corinne put it said, prayer package didn't work. God helps those who help themselves. I'm not laughing at you, Corinne, but that just was funny. That caught me off guard. Oh my goodness. I heard, Yolanda, I heard you on mute. Was you going to say something? Okay, I'll take that as a no. All right, so what would you want to see? What would you want to see at this point right here? Since the weekly is showing signs of agreeing with the higher time frame bullishness, what would you want to see based off of what we have marked out right now? Right? What would you want to see? Ouch! Ah! Ugh. Y'all know what's happening right now? Oh! Ouch! Seawalk D want to see price trade above that Cibi and use it as, oh, shout out Wells J Rock, man. Wells J Rock came through in the Cobra clutch. Right? Shout out 80. Respect the lows and start making fair value gaps heading into the volume imbalance and Cibi. Right? Shout out 80. Right? Yes, but Wells J Rock said it very concise and to the point of what would show you a bullish signature, right? Respecting the lows and starting to head to the fair value gaps in the volume imbalance up here, that doesn't necessarily mean bullish, right? That doesn't necessarily, and we're going to get into that when we talk about the bearish narrative, right? So with the, as Wells J Rock said, you want to see price trade above the Cibi and use it as an inversion fair value gap, right? That right there is concise and to the point, right? You want to see it get above it, meaning close above it, right? On a weekly basis, right? It doesn't have to happen in 1 week, right? These are weekly candles. You give it time to play out, right? It doesn't have to happen in 1 week, right? But you want to see it close above it and then use it as an inversion fair value gap, right? Meaning close above it, and then if it decides to trade back to it, you want to see it bounce off of it and continue up, right? Towards this breakaway gap, towards this buy side, right? So close above it and use it as an inversion, right? Exact to the point. Those are the signatures you're looking for, right? Because it has shown a signature of wanting to agree with the bullishness of the monthly time frame. So in this case of what we got going on right now, the next bullish signature you want to see is closing above this right here and then using it as, so close above it, right? That's a signature. Use it for inversion fair value gap, that's a signature. That's, you know what I'm saying? Those are all signatures you're looking for, right? So that's what you want to see. You don't want to see it close above it and then just drop back below it and keep coming down. You don't want to see that, right? Why is that? Because if we come up here, right, and get above it, right? Somebody tell me what if we trade up here like that, right? No matter if we close up there, close down here, close right here, close right there, close above it. If we trade up here, right? What are we watching for? What do we have to allow for then? Once this first piece right here, just trading above it. Yeah, trade above it. Don't worry about if we close or not. If we trade above it, what do we have to watch for after this weekly candle closes? What do we have to allow for?
Balance.
Yes, we have to allow for this to show if it's going to be an immediate rebalance or not. Right? If it's going to be an immediate rebalance, right? And speaking of the immediate rebalance, right? If it traded up there and created that and then start showing signs that that's a possible immediate rebalance, what side of the argument would that be a pro for? You know, you got pros and cons to everything. What side of the argument? Bearish, right? That'd be a bearish argument, right? And going back to what 80 said, right? If you're bearish, right? Remember, if you're bearish, what do you want to see price do? You want to see price engage with buy side and then make a run for sell side. So if we start to trade up into this volume imbalance and fair value gap, which is your entire inefficiency right here, how I got it marked out. You got it, you know what I'm saying? Right there, right? You got a fair value gap and a volume imbalance in there, right? If we start to trade toward that, that doesn't mean that you're bullish just because we're trading toward that, right? That could be a part of the bearish narrative of saying we're drawing up to the bearish fair value gap to come down and attack the sell side down here, right? That, remember that weekly sell side we was talking about, we was watching there, right? That could be a part of the bearish narrative, trading up, taking out the buy side above the last week's high, trading into the SIBI, and then coming back down, right? That could be a part of the bearish narrative. That's why I say, because it's showing signs of agreeing with the monthly time frame, you want to map out the bullish signatures you want to see, right? Not just want to see, it's if price does this, then it should do that, right? That's what you're looking for. If price does this, which is come respect this, come down, respect this, start to go back up, then it should do that, right? So we got price doing this. It's in the midst of doing this, right? It start to give you little signatures, right? So now you're saying then it should do that, right? But you never want to just lock yourself in and try to pick a bottom, right? So you also want to know what invalidates the bullishness, right? So then you want to look at the bearish side of it, right? So then you say, on the bear side of it, right? When you come up here and hit this, right? And price comes down and does this, then it should do that, right? So if price come up, hit that, and give you bearish signatures, right? There. What will your bearish signatures be? If we come up, hit this, and then come down and take out that sell side, right? Then it should either keep sliding through that sell side or give you some type of retracement to attack that sell side, right? So you want to know what signatures invalidate what you're looking for, okay? But since price is bullish, you want to focus on your bullish signatures first, right? And then once you get your bullish signatures, why? Because the monthly is still in the buy program, right? The weekly switch to a sell program. but now it's starting to respect discount PD arrays, right? It was in a sell program where it was disrespecting discount PD arrays, but now it has started to respect discount PD arrays. So now it's starting to agree with the monthly, which is in a buy program. Okay, everybody, I think I done beat that horse enough, right? On the daily time frame, we're going down, getting more and more detail, right? Getting more and more detail. Okay, so we came down here on the daily, right? Once we got to our anticipatory reactionary point here, right? We said we dropped down. We didn't get our eagle on. We started to consolidate, right? We dropped down and started to consolidate. Okay, we consolidated there for 1, 2, 3, 4 days, right? So we dropped down in that area on last Monday. Then Tuesday, Wednesday, Thursday, and Friday, we consolidated in that area, right? On Tuesday, we set a low. On Wednesday, we set a high, right? And then on Thursday and Friday, we traded inside that range, right? From the highest high to the lowest low of that range, right? That was the high. Let's make it a different color, right? Then we, let's make it a different color than what we typically use and fatten it up some, right? And then I'm going to copy that. Well, the low is already there, but there you go. Fatten up a little bit more, so hopefully we can see it a little bit better, right? So that's the highest high and lowest low of that little consolidation area, right? We traded inside there on Thursday and Friday, right? Thursday, we dropped down and took out the prior day's low. Friday, we pushed up and took out the prior day's high, right? Okay, so looking at the signatures that it is giving us, right? Right, looking at the signatures that price is giving us here, right? We came down, made a low. All right, came down, made a low. We went up, made a high. Dropped down, did not take the low, right? Did not take the low. We took out sell side, but did not take the low, right? We pushed up, we took out buy side, but did not take the high, right? So what do? We engineered liquidity here. We engineered liquidity there. All right. Then once we engineered liquidity today, what do? We expanded and took out the buy side. Right. All right. So what else did we do? What else did we do?
Inverted that fair value gap.
All right. We got an inversion fair value gap here. Right, we created an inversion fair value gap there on the daily. Right, remember we was watching it. That's one of the fair value gaps that we was watching. Right, when we said we was in between the tail of two cities. Right, who remember that? Who remember that when we said that? Do we still got it over here? Let's see if we still got it over here for the haters. Just in case it be some haters over here. Let's see if we still got it. Daily fair value gap. That's the bullish. That's the bearish. Yes, it is. We still got it. Just in case there's some haters here. I remember we said last week. What did we say last week? We was talking about here. We said we was in between the tail of two cities. We had a bearish fair value gap. We had a bullish fair value gap. Right? So on Wednesday, we traded up into the bearish fair value gap. Came down. Respect the consequent encroachment of the bullish. Respect consequent encroachment of the bearish. Thursday, we traded down, taking out the sell side below Wednesday. Did not take out the sell side. Remember we said on the lower time frames, we were saying that was acting as a protected low over here. So we started looking for reasons to start trading back up. Right, we was talking about the trades that I had took. It was like it was acting as a protected low and was looking for reasons to trade back up. Right, and so we came back up on Friday and took out the buy side right? Respecting consequent encroachment, respecting consequent encroachment. We was like, we're still in between the tail of two cities, right? So now, to date, we came up, right, and created an inversion fair value gap, right? What type of signature is that? That's a bullish signature, right? Respecting the down close candle, right? That's a bullish signature. Okay, respecting, in this case, discount as far as being below price, right? Respecting the discount PD rate. The because we opened here and this PD rate is below price, so we came down into the fair value gap and we respect the discount PD rate. What did I just do? All right. Premium PD rate as far as being above price, not just in a premium, as being above price, right? We traded through the premium PD rate. We disrespected the premium PD rate, right? So at this point here, the daily chart has switched to a buy program, right? The daily chart has switched to a buy program. That's also in line with the monthly time frame, right? So that's in line with the monthly time frame. Okay, what did we say we were looking for on the weekly? Somebody remind me. I'm 52. My mind, sometimes I forget things. What did we say we want to see on the weekly time frame? We wanted to see price do what? Hello? What's up, Scorpion? It's me. Hello?
See it get above the inversion fair value gap first, right?
We want to see it create an inversion fair value gap here on the weekly. We want to see it get up here and close above here on the weekly time frame. Right? So right now, the daily is in agreement with that because the daily has switched to a buy program. So now that the daily has switched to a buy program, right, we want to see the daily use this inversion fair value gap as support. Right? So since we want to see the weekly create an inversion fair value gap and then use it as support, the daily has created the inversion fair value gap. All right. So just think about if this day hadn't happened yet, right? When you're prepping your chart on Sunday, right? You're looking at the weekly and you say, okay, now that the weekly is since the weekly is in agreement with the monthly, and I want to see the weekly create an inversion fair value gap and then use it as support, right? Create it and use it. That's what I want to see, right? Now we're going to go to the daily time frame and say, okay, since I want to see the weekly create an inversion fair value gap and use it. Oh, look, we got a bearish fair value gap. Where's that bearish fair value gap residing? Oh, it's residing down here in the discount of this last leg down, right? Let's come here from when we left out of this balanced price range right over here, right? Price dropped out of the balanced price range there, traded back up into it, it dropped down, right? From that high to that low, right? This SIBI is in the discount of this move, right? What do we anticipate whenever we see a SIBI in the discount of the move? We anticipate it becoming an inversion, but we don't try to force it. We never try to force it. We just anticipate it, right? And when we're in between the tail of two cities, bearish, bullish, right? We wait for the algorithm to show us what it wants to do, right? But going into it, you say, hey, if the weekly needs to get up here, right, then the daily needs to do the same thing because we start to see it. We get the detail on the lower time frames. So we would want to see the daily create an inversion fair value gap, then use it as support. and eventually get up here so that the weekly can create an inversion fair value gap and then use it as support, right? Now, today has come in and created the inversion fair value gap. What is that signature is in line with what you're anticipating to happen on the weekly, right? That's in line with what you're anticipating to happen on the weekly, right? Well, Tim, no, you're not there. You watch it step by step. If price does this, then it should do that. If price does this, then it should do that. If price does this, then that's what you keep doing. That's what you keep doing over and over and over and over. Well, Tim, when do I execute? Whenever in your trading plan, whatever your trading plan says execute on, right? If you are a turtle soup trader, right? If you are a turtle soup trader, right? At this point on like a daily time frame, right? At this point right here on the daily time frame, you don't have anything to execute off of, right? Why? Because you will be looking for, right? You will be looking for a turtle soup buy below a low, right? And we haven't gotten that, right? When we came down here and set this swing low right here, right? As we traded back down, we never took that low, right? So you don't have any, you don't have anything to buy below over here. If you're a turtle soup buyer, right? If you buy off of an order block, right? That was your buy right there today. If you buy off order blocks, right? Am I saying you're right and it's going to go to the moon? No. If that's what your strategy says, once I'm in a discount, right? Price moves into give me a bullish signature. If it retraces back to an order block, I go. Okay, there you go. Boom. That's your buy right there. If that's your strategy, right? I can't tell you when to buy. Your strategy tells you when to buy. Only thing that we're going through together is if price does this, then it should do that, right? If price does this, then it should do that. Okay? Does it mean that we won't come down and sweep liquidity before going up? No, it don't mean that, right? No, it don't mean that. But since price has chosen the buy side, right? Since price has chosen the buy side, coming back down to take out sell side, right? Would lean more toward the bearish narrative, in my opinion, right? Because we consolidated and then we expanded up, taking out the buy side. And consolidating and taking out the buy side, right, at this point right here is switching back to a buy program to get in line with the higher time frame narrative, right? If the higher time frame narrative was bearish and we took out the buy side, right, that is where you'll be looking to see, okay, do we get the signature that this is a possible Judas swing to come back down, right? But since the higher time frame is bullish and then the monthly is bullish, the weekly is starting to respect discount PD raise, switching back to a buy program, right? And then now the daily has switched back to a buy program, right? Everybody is coming back into one accord, and and we have bullish divergence structure wise and percentage wise, and we're in a deep discount when we have been falling for 1, 2, 3, 4 weeks straight. We've been falling for 4 weeks straight, and we've come all the way back to a deep discount. So we've come to a discount, right? We've come into correction territory. We've come to a anticipatory reactionary point, and now we're switching back to a buy program. These are all bullish signatures, right? These are all bullish signatures that you're watching, right? So now it's at the point where now for a daily standpoint, now you would be looking for your signature of execution, right? Now that we have gotten an inversion fair value gap there, right? We came down, got a first touch off of this order block here, right? Got a first touch off of this order block here, okay? Now you have an inversion fair value gap, right? If you trade inversion fair value gaps, you can be anticipating a retracement back down into the inversion fair value gap, right? If that would be a signature to say, hey, I want to buy off of there, right? Or if you're the type who, who wants a break in market, we have a shift in sentiment right here, right? But if you're a type who wants to have a break in market structure, right? You want to see us trade above that high right there. That would give us a bullish break in market structure there, because that swing high right there came down and took out the low. And if we trade back above that high right there on the daily time frame, that'll give us a bullish break in market structure. Okay, this right here would give us the change in the state of delivery, because these down close candles here. Now this is where you can say, okay, I would treat this as my change in market structure, because this down close candle right here closed lower, right? This down close candle there closed lower, right? So this is actually the lowest closure. That's the lowest low, right? That's the lowest low as far as percent wise, you know what I'm saying? Anything wise, that's the lowest low there. So in this case here, you can say that's my change in the state of delivery, right? You can use that order block as you change the state of delivery, because that low is lower than that close is lower than that close. So that's the lowest low right there. If you put it on a line chart, this is going to be the lowest low. Like if I put a line here and then put a line on that, well, it's already a line on that low right there, and then change it to a line chart over here. See there? That's the lowest low right there. Right? That's your lowest low right there. Okay? Right? But if you look at like the wicks to give you your highs and lows, right? And that right there will be your high for this price leg. That will be your low for this price leg, right? And if you trade back up there, that'll give you your bullish breaking market structure. And then these consecutive down close candles reach the farthest wick wise, right? So that right there would be a change in the state of delivery on your bullish order block, right? On your bullish order block. It's all about the amount of confirmation that you need for your trading strategy to say, okay, this means this for my trading strategy, for my risk tolerance, for what I want to see as confirmation. All right. Now,
Tim, hold on 1 second, just to make sure I understood, because that body was the lowest body. Not as a change in state of delivery, but as a confirmation order block, it could be used.
It's an order block regardless,
Right,
because we
right.
consolidated here. But
Right.
because there is liquidity resting below relative equal lows, right? There's, as far as body wise, this
Yes.
body, because right here, this is a rejection block right here. This
Okay.
body traded down into this liquidity right here, into this rejection block. It just didn't take out this swing low where the smart money would have the stops resting, and it traded below here and took out these lows here, right? If you look at like the line chart, I put it back on the line chart again here, right? See, it traded down and took out the stops resting below there, right? So anybody who put their stops there, we dropped down, took out those stops there. So this swept out the liquidity and then moved back up. So now this right here would be your change in the state of delivery after running out that liquidity. You see what I'm saying? Because you're looking for your change in the state of delivery once you run out a significant level of liquidity at an anticipatory reactionary point, right? So then that's when you're looking for that bullish order block to act as your change in the state of delivery, right? Because you get a change in state of delivery for every green and red candle. But when you're looking for the ICT change in state of delivery, you're looking for the liquidity sweep at a key point, and then you're looking for that bullish or bearish order block being created. And in this case here, you're getting a liquidity sweep under the rejection block, and then the change in the state of delivery created there, right? Make sense?
Yes, that's a little gem I didn't know. Thanks.
Okay. That's all based off of like looking at, like, I don't talk about rejection blocks a lot, but that's what, and you know, y'all knows whenever I talk about the rejection blocks, I always go to the line chart so you can get a visualization of, because I'm a visual person, right? Because, you know what I'm saying, it's hard to get the concept of there's liquidity resting under here, because you're like, it's a low right there though, but in the sense of like hedge funds and people with big money who don't watch intraday price action, right? They're looking at charts like a line chart, and they see that right there as a low. They see that point right there as a low. Okay, put my stops below. I want to buy at 19,401 and a quarter. I want to buy at 19,401 because that's where the low is. You know what I'm saying? That's the lowest low that's on this line chart, right? And when they be talking about percentages, they talking about these closures here. They're not talking about where that wick went. They talk about where did we close at on that day, right? So we closed there on that day. We closed there on that day. That's what they talking about when they talk about like the closure. So that's where the idea, in my mind, that's where the idea of them rejection blocks come from, because we come down, right? We sweep the liquidity, right? And then we push back up, right? And now there, boom. There's your bullish breaking market structure there, and then your change in the state of delivery is like right over there where I said that opening price on that what's the name was. Right, if I change this, can I change it to like open on here? Yes, open right there. So there's your change of state of delivery there, because that's that open price there. And then I change it back to
close. You ever view it from a line chart as a breaker right there?
Yes.
I mean, it's a change in state of delivery as well, so I guess that's added confluence. But yes. Would you ever, like, on something like that, drop to a line chart and use it as a breaker, or no?
Nah, I don't try to look for breakers on line charts, because with the breakers, I need to see if it's an up close or a down close candle. It'll be in here somewhere, but I need to see what's going on with the candles, because like looking here, I see the concept of a breaker being there, but I need to see the candles of what's going on, right? I need to see the candles of what's going on, because it can look like the concept of a breaker being there, but is it really a breaker there? Because this is just a pattern. You see what I'm saying? We're just looking at the pattern. Is there actually a breaker there? You follow what I'm saying? And then when I come here, I see that, okay, I'm just inside this consolidation right there. And for the sense of, even if you were looking at it candle by candle, right, it's not even a breaker there. If we tried to go candle by candle, but we're just consolidating. So there's, you know what I'm saying, there's no price leg, there's no price leg, there's no price leg. We're just chopping right here. So I'm not looking for a breaker in this slot right there, right? So that's just like the pattern. That's why I say we don't want to try to trade the patterns. We want to make sure we understand what we're really looking at, right? Now, if you go to a lower time frame, like on a 60-minute chart, excuse me, and then look at this area here, right? Then right here, we can see that we came down, right? And we got a bullish breaker here, right? You have a bullish breaker here, right? We got a million bullish breakers in there, but what would be, you know what I'm saying, what you want to do is look at what would constitute a ICT breaker and where will you be looking to use a ICT breaker, right? So just looking at what we're doing here, right? This is a place where you'll be considering waiting on an ICT breaker to form, right? Why? Because we got these up close candles and we get evidence of institutional sponsorship, right? Once we get the evidence of institutional sponsorship, what are we doing? We're looking for this to become a breaker. Since we're looking for this to become a breaker, we can trade the breaker model, the advanced way of looking of getting long over here somewhere. Like price trades down, we can look to get long over here, right? Looking to get long over there because we're anticipating this to become a breaker. And then once we get up here, we can trade back to that leg. Remember, we got the A leg, the B leg, the C leg, and trade back to the B leg, right? We can look to get long over here to use that as a breaker, right? So you want to look for in places that make sense to look for a breaker, right? We can come in and find stuff and just say, hey, this is a breaker, this is a breaker, this is a breaker, this is a breaker, right? But when you're analyzing price, you want to look for it in the most evident places that says, okay, this should act as an ICT breaker. Why should this act as an ICT breaker? Well, we consolidated here, right? We had evidence of institutional sponsorship where we moved to a discount, engaged sell side liquidity, right? Left buy side in the market above price, right? And then so once we came to an anticipatory reactionary point, then once we come back up, right, and trade above that, now we're looking for that to act as a breaker, right? And then now that goes in line with getting on top of this to use it as an inversion fair value gap. So we get up there, get on top of it, use that as inversion fair value gap, trade back down into your breaker, right? And then go back up. You follow what I'm saying?
Yes. That's just like you said, remember to put everything together with the institutional sponsorship.
Yes. Yep. So we look for the stacks on stacks, right? And it's just like today, when we was looking at price today, since we're on the hourly time frame, let's just come here, right? We was looking at price today and start. Let's put this on so we can see. So it's 9:30 to 1600, right? So this the 9 o'clock candle there, right here. This is the 9 o'clock candle there, right? So inside this candle here, we started trading. Let's go to 15 minutes so we can see it. Let's mark out this. So coming into 9 o'clock, we still had this amount of this fair value gap left open because we had already traded down into it. That was our internal sell side. Remember, we marked out that internal sell side there. Right, so that was our internal sell side. We didn't have this marked out, but I'm just marking it there now for visualization purposes because we talked about there being a fair value gap down there after we marked that sell side, right? So now let's go down to the 15-minute chart. Okay, so looking at our 15-minute chart here, right? We let me get this stuff out of the way because there's too much going on. Hide that daily again. That daily and that monthly. So hide that. Okay. Right. So 9:30 here we opened up and we started pushing up, right? Was going up. Remember we said there was buy side over here. What did that? I must have deleted that line because that was the line right there. That was the buy side line right there that we had marked out. All right, cause remember I was like, we had this high, and I was like, oh, we made a relative equal high. So that was the buy side there. Right? That was the buy side there. And was it higher? What was it? No, that was it. Okay, so we was trading up, going toward there. We was like, okay, the way price was moving, right? We should have been going up, but this 1 hour SIBI was proven to be a formidable foe, right? We set the initial high and we set the initial low for the opening range, right? Between 9:30 and 10. All right. Now that we set the initial high and we set the initial low, right? Price traded back down here, right, and came down into the hourly fair value gap, tapping into that sell side. Remember, like during the morning session, we said price had got real ugly. We was like, hey, this is when I would have been getting chopped up. Price got super ugly during the morning session, right, and took out the sell side. And then as we got ready to move into the London close, right, we came down and finally traded into that hourly fair value gap, trading down and sweeping out the sell side. Okay, now that we've taken out that sell side, what could that have been used for, in the sense of when we said looking back over here at this up here being a breaker, right? Well, what was that? We're on 60-minute time frame when we looked at that. Right, we said look to where we was looking over here. Right, this was I was looking at there because that was like the most obvious thing that I was looking at there. Right, we was looking at that as the most obvious point there. Right, and even if you ain't looking at that one, if you come to the latest part right here, this is the latest leg there, so you can use that one because that one is a little bit farther back. You know what I'm saying? That one's a little farther back, but you can use this one or that one. They all right there in the same place. Pick your poison, okay? So we're looking at this right here as becoming a breaker right there. The full thing is all the way to the wick, right? We're going all the way to the wick there, but we're just looking at the bodies in this case here because we got a long wick at the bottom, okay? So if we're looking at that to become a breaker, right, we said we can use the advanced technique of I'm anticipating this to become a breaker. So when I come over here, right, this is what we talked about, that low right there. When we dropped down, we didn't take it out, so it was like that's acting as a protected low, if y'all remember back on Thursday, right, and was looking for a reason to trade back up into here. It was the same concept here, anticipating this to become a breaker. Y'all, if y'all remember this, put a 1 in the chat. If you don't remember it, we'll go back. Empire Trader says, what is a bullish breaker? I got a lingo playlist. Empire Trades, you said you was gonna watch that lingo playlist and you was gonna watch the PD Array playlist. So that question right there is not computing right now because you told me you was gonna go back and watch it. And if you did, and if you did, we had the lingo and we had the PD arrays and we had the price action and you said, I'm gonna go back and watch it all. I'm gonna watch it all. Did we have videos on breakers? Somebody tell me if we had videos. Did we have videos on breakers? What a breaker is? Anybody?
Yes.
Did we? Oh, we did. Okay.
It's in that price action playlist.
Yeah, the artery and price action. Yeah, it's in the artery.
The first one you did, yes.
It's in the art. It's in matter of fact, it's in Mama I Want to Trade too. It's in Mama I Want to Trade. It's in the artery and price action. It's all over the place. Mama I Want to Trade. Hey hey. Who remember that? Do y'all remember Mama I Want to Trade? Who remember Mama I Want to Trade?
Yeah, I remember that. Yeah.
Mama, I want to trade. Hey, hey. Anyway, we just talked about breakers the other night. Go watch the breaker video. And if you still got a question, ask on the next time, and I'll tell you what a breaker was. Yeah. You got to watch it over and over again. That's why I always say stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks. Okay, so y'all remember over here what we talked about. We said this right here, we didn't take that low out when we dropped down here. So the concept, the idea I had playing out was this was going to act as a ICT breaker. Right, so when we came down here and did not take out that low, right, price showed an unwillingness to want to trade lower, right? So I was looking for a reason to trade back to the B leg, right? A to B to C, right? So I'm looking for a reason to trade back to this before the breaker is ever actually created. And now look how beautifully this has played out, right? This is our breaker right there. If we stretch it out, look how beautifully that played out. Breaker 1 hour, bullish breaker 1 hour, boom. Look at that, right? We created the breaker, right? Traded back down into it, hung out there for a while, right? Hung out there for a while, expanded away, right? And now today, what were we talking about? This bullish fair value gap right there, right? After we traded into this breaker that we just used last Thursday with the concept of this is going to become an ICT breaker. So I want to trade back up into this high right here, right? We talked about that last week, right? Using this idea of institutional sponsorship down, trading down into the sell side, right? Respecting that low as a protected low, because we was looking at that as the possible smart money reversal. Respected it, boom, showing that it's still a protected low. Trade back to the B leg right here. So now, okay, boom, there's our breaker, right? And here we go, right? This was that was Thursday, Friday, Thursday trading right here. This is Friday trading, right? And then after Friday trading is what created the breaker. And then starting Monday, right, 6 o'clock p.m., we traded back down into that same breaker, right? Consolidated there throughout the night. And then in the London, we displaced away, right? And then at like 9 o'clock, we traded up into the bearish fair value gap, right? Traded back down into the bullish fair value gap, swept the sell side liquidity into the balanced price range here, right there, into the balanced price range, right? And then traded back up, breaking the high. So the breaker worked out beautifully. We talked about this last week as becoming a ICT breaker, right? And it was over here lunchtime on Thursday when we spoke about this becoming an ICT. Well, we spoke about it later, but when we had the idea of this becoming an ICT breaker during lunchtime on Thursday, and then here we are at 6 p.m. on Sunday, we trade down into the breaker, and then at London time on Monday morning, right, we trade off of the breaker, creating a new high, right? And then New York time, we trade back and take out the internal sell side that we marked out. We said this is our internal sell side. That's our sell side. And then our buy side was here, right? That was our high right there. That was our high. That was our overnight low, right? So that was our buy side. That was our sell side. That was our internal sell side. We took the internal sell side, and right here, if you're a turtle soup buyer, buying below that low. Why are you buying below that low, right? Because you're anticipating price to respect this bullish fair value gap, because we have respected the bullish order block over there, right? You look for price. If you're a turtle soup buyer, you're buying below that low, right? You're not a turtle soup buyer, right? On this hourly time frame, right? You have an opportunity of trading off of a fair value gap here, right? We just traded into the fair value gap there, right? At this point, if you want to like try to squeeze out a breaker inside this move right here, me personally, I wouldn't try to squeeze one out in there because we're just inside some consolidation. But technically, right, you do have a breaker here because price expanded off of this PD array, took out buy side, right? Dropped down, took out sell side, right? And now, so we have A to B leg, B to C leg, and trading back up above the B point. So technically you do have a breaker here, right? Technically, but I wouldn't look for one in that area there. So again, anticipating this to be a bullish breaker, right? This was an opportunity to trade it with well, actually, back here when we first traded it there, that was one opportunity to use the advanced method, right? This was a second opportunity off of that breaker that we traded back to, right? So we traded here with the anticipation of this becoming a breaker. That was your first opportunity using the advanced method of this being a breaker, right? Once we got up here and traded back down into that breaker, that was your second opportunity of getting long based off of this becoming a bullish breaker, right? And then now that we've moved up here, that fair value gap there was a third opportunity of getting long based off the fact of this becoming an ICT breaker. And then now here you have opportunity trading off of this fair value gap, right? That's opportunity there to see if this would play out for you as far as trading with this, anticipating it to become an ICT breaker, right? Will every single trade work? No, you're not going to win every single trade. And how do I know that? Because I shared this with the gang today. I shared this. I shared it with the gang on YouTube and in the Discord, right? I said, you win some and lose some on tough days. Remember to stick to your plan and know when to walk away. $100 day is a great day. Big spider. You hear me? All right. And that right there, I traded in 2 different accounts. Got my head bust to the white meat a couple times. And it worked out a couple times. But as you see, I kept my loss smaller than I kept my win, right? And there you go, $100 day. Hey, that's a great day to me. It's better than being down 300, right? So you're not going to win every trade, right? I'm not promising you're going to win every trade, right? But it's about if price does this, then it should do that. Okay. You're right. What's up, Father Legends? You gotta know when to hold them. Know when to fold them. Hey, man. I'm kind of tired of talking now. But hopefully y'all can kind of see, you know, the fractal nature of price. We've been, for like the last week or two, right? Bernie Madoff won every trade, and we see where that got him. Okay, Bernie Madoff. I don't know Bernie Madoff's story. I know the name, but I don't know his story. So hopefully y'all can see the fractal nature of price. Hopefully y'all can see, like, day by day, we've been talking about this stuff, and I'm glad we start talking about those breakers, because now we can see, right? Just like how now here, I just zoomed out and a question was asked, and I was like, you want to do it based off of price, a place that makes sense algorithmically. And I just zoomed out and said, hey, boom, looking at this area here, we consolidated, got evidence of institutional sponsorship, came to an anticipatory reactionary point, right? And so now, anticipating this to be a breaker, you would look for opportunities to trade down here if you trade in the advanced model. If you're waiting for the confirmation, right, that goes in line with what we already said. We want to see this weekly fair value gap becoming an inversion fair value gap and use that support. So if we trade up here, created this breaker, and we traded back down into this area there, right? That's why I picked this, because this is the highest up close here, right? We'll be trading back down, and this will also be a breaker there too, right? That right there would just be going back to the inversion fair value gap inside. Back to the inversion fair value gap inside the breaker leg, right? We came up and came down. Got an inversion fair value gap over here, right? Same thing, but you will be trading back down and using that as support, right? Based off your ICT breaker over there, right? And then now you can see it actually played out based off something that we spoke about before it happened, right? We talked about this over here. Talked about taking a trade back into this area. And now you see 2 days later, because this was Thursday, when we anticipated this becoming a breaker, right? And then Friday, we traded, I think we traded back up to it. No. Friday. It was like during the nighttime. So Friday, we traded back up going toward that. And then here we are Sunday, the next trading day, which is Monday, traded back and used the breaker to continue up, right? So we talked about it becoming a breaker, and we see it being used as a breaker over here, right? So hopefully y'all can see the fractal nature of price, because we've been walking it down like a dog since the beginning of March, right? So 2 weeks now. So for 2 weeks now, we've been walking price down like a dog, because we've been talking about that monthly, that weekly, them dailies, right? Them dailies, and now we're talking about this weekly here, right? Now we got this daily inversion fair value gap now that we're watching here. Get out the way, Fibonacci. This daily inversion fair value gap there that we're watching, right? All that we've been walking it down day by day, day by day. So hopefully y'all starting to see the fractal nature of price, right? And I'll open it up for questions if anybody got anything. While we seeing if anybody got anything, man, y'all check your boy out. Y'all check your boy out, man. You want to be a part of the gang? The link is at the top, pinned to the top of the chat, also in the description below. All right. If you're a Diamond member, we have tape reading sessions 3 days a week, Monday, Wednesday, and Friday at 9 a.m. Got 1 million Q&As a month. Right. All levels have Q&As. Right. Is the immediate rebalance still in play? What immediate rebalance are you talking about? What immediate rebalance are you talking about? What immediate rebalance are you talking about? Talk about here? Empire Trades, you need to go back and watch the videos. Empire Trades, you need to go back and watch the videos. You need to go back and watch the videos. You need to go back and watch the videos, Empire Trades. And we talked about that also. We talked about that Friday. We talked about that Friday also. But just looking at the chart. Looking at the chart. You tell me. Looking at the chart, you tell me. Right? What are the signs of an immediate rebalance? Tell me that, Empire Trades. Put in the chat, what are the signs of an immediate rebalance? What are the signatures of an immediate rebalance? Do we got anything else? You don't know. All right. So for an immediate rebalance, all right, you create a fair value gap that supports the order flow, bullish or bearish, whichever supports the order flow, right? Then once it's created, the very next candle is going to trade and reprice the entire imbalance. It's going to reprice the entire imbalance, right? Once it does that, right, the very next candle, you want to see the very next candle get out of there, and within that very next candle, now this part is just me. I like to see it in the next candle at the latest 2 candles later, getting out of there and on its way to the liquidity that it should be sending it to, right? So, did we get a fair value gap supporting the order flow? Yes, we did. Did we get the next candle overlapping the imbalance? Yes, we did. Did we get the candle following that leaving the area? Yes, we did. But did we continue leaving the area and engage the liquidity? No, we didn't. We reversed. So at that time when we reverse, it's no longer an immediate rebalance. And in that case, we was just still consolidating. We were just still consolidating because we stayed inside the range between the highest high and the lowest low. It was no longer an immediate rebalance on the table because this candle here did not continue down to take out the sell side. We turned around and we went all the way back up, right? All the way back up into the fair value gap, back up into the range, right? So at that point there, the immediate rebalance was off the table. Stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks. Man, do you think I know? You know how many videos I got on my channel? I say, what video did you make it do immediate rebalance? How many videos I got on my chart? I'm on my channel. Vernon, how many videos? D, how many videos I got on my channel? You say you was waiting on price to come down today. Why was you waiting on price to come down today, Empire Trade? Why were you waiting on it to come down today? What about price said price was going to come down today for you? Tell me. This is a serious question. What about price today made you say price was going to come down? Serious question. What about price today made you say, I'm waiting for price to come down? Because I thought about the imbalance. What if there's no imbalance down there? There's no imbalance down there. What imbalance? There's no imbalance down here. There's nothing down there but sell side. We had already said there's nothing down there but sell side. Yes, E-Rock, we still here. We already said there was nothing down here but sell side. What imbalance? We already traded into the daily fair value gap. That was the lowest daily imbalance. We had already said that. We had already traded to the lowest daily imbalance. All right, we were consolidating here. All right, we said we had created sell side there. We created buy side there. Right, we was looking to see if this right here would act as an immediate rebalance. Right, we said this right here was supporting the idea of this being an immediate rebalance, but since we didn't take out this low, we said that low was still acting as a protected low, right? And then when we traded back up here, we said that immediate rebalance is off the table because we didn't take out the low, right? We spoke about this acting as a protected low, and we was anticipating price to trade back up, right? That's where the whole idea of trading back up to this right here came out, right? Trading back up above this, right? Came down, did not take out that low, and took a trade to come back up to this high. So we was looking for price to come back up to there. And if we look for price to come there and we're anticipating this to be a breaker, that means we don't want to see price come down here no more, right? We want to see it be supported by the breaker, right? So if this right here, because the reason why we was looking for that as a protected low, because we said we was looking for that to be the smart money reversal. And if this right here is showing that it's the smart money reversal, because we're refusing to take out the low, and then we come up here, right, and we get our breaker, right? We get our break and market structure with our breaker. Now we know that we're on the right side of a market maker buy model. And if you're on the right side of a market maker buy model, right, we're looking for reasons to buy. That's why I'm asking you, what in price made you want to look for reasons to sell? That's why I'm asking. Nah, it ain't no copy. You still ain't told me. You said what you thought about. I said, what did you see? What did you see in price that said, hey, price should go down there? What did you see in price? We ain't thinking. We ain't thinking right. We looking for algorithmic signatures, right? Algorithmic signatures. The rejection of the fair value gap. You said the rejection of the fair value gap. You said the rejection of a fair value gap. What fair value gap are you talking? You talking about this fair value gap right here? Closed under 50%. Okay, but we closed above 50% of this one. We closed above. We talked about this. We was talking about this ever since Wednesday. We was in between the tail of two cities. We got a bearish fair value gap. We got a bullish fair value gap. And we said we respect the bullish fair value gap there. We swept liquidity, right? And then we came back, respect the bullish fair value gap again, and respected the bearish, right? Traded down, right? Did not take out the low, right? The low is acting as a protected low, looking for a reason to trade back above this high right here, right? That's the order block we was looking at, right? We actually traded back above the order block. Back above the breaker, right? Created this order block. Then today we traded down into the order block, right? Traded down into the order block and went back above it. So this right here was the rejection there, right? But once we came down here, we got signatures showing that price didn't want to go lower at this time. That was saying go back up, right? So you're looking past all of this and looking at something that happened over here, right? That's why we say we don't want to just look at patterns, and we don't want to get caught up in what we think. Right? I don't even look at the 2 hour. I don't look at the 2 hour. In other evening news, how y'all doing? This I ain't for to drive to your house and mark up your chart for you Empire traders. I'm not finna do that. I'm not finna do that. Do anybody else got anything else? Right? I'm not finna do that. Do anybody else got anything else? I done got hungry. Hey, gang. What I was about to say. I lost my train of thought. I was about to say something to y'all, but I lost my train of thought. I'm sorry. I lost my train of thought. Hey, man, I appreciate y'all for pulling up with your hard-hitting questions. I appreciate y'all for hanging out with your boy. I'm trying to remember what I was gonna say. I can't remember what I was gonna say. I done lost it. Anyway, man, tomorrow is Tuesday. No tape reading tomorrow. I'll see y'all tomorrow night at 6 for the price action recap. we got when is FOMC meeting? Tuesday or Wednesday? When is the FOMC meeting?
I believe it's Wednesday.
It's Wednesday. Okay, so we got FOMC meeting Wednesday. So I know Wednesday morning probably gonna be trash. Tomorrow may be trash also, right? Because coming in front of FOMC, a lot of times price will be trash. Okay, it'll be trash coming in front of FOMC. So be careful. You know what I'm saying? Don't try to force anything. If it ain't clear, if it ain't crystal clear, you know what I'm saying? Don't force it. And you know what I'm saying? Just go for base hits. You know, don't try to get greedy. Even if it run farther than you expected, just go for base hits. Go for base hits. Don't try to get greedy, you know, because we got big news coming up on Wednesday. FOMC price, you know what I'm saying, it's about the interest rates. It's a rate announcement, right? So this is like big economic news, right? The president is hot and heavy with tariffs. You know what I'm saying? It's like, so he's pushing tariffs. He's pushing these other things. He's pushing for the feds to do something with the interest rates. You know what I'm saying? So it's like, it's always this thing where the president, no matter who the president is, the president and the Fed, they either going to be ace boon coons or they going to be enemies of the state, right? Because the Fed don't work for the government. They're an independent agency, and in the president be wanting them to do something, and they be like, nah, we doing this. You see what I'm saying? So they either gonna be ace boon coons or they gonna be enemies of the state, right? So right now, and right now, the president trying to put pressure on the Fed, and the Fed trying to stand 10 toes down and stick to their plan. So it's like the market don't like uncertainty, right? So since the market don't like uncertainty, the market not gonna move in front of big news. It ain't gonna do nothing drastic in front of big news. Now we got tomorrow. Tomorrow may be a good day, right? It may be a good day, but you always want to proceed with caution going in front of FOMC, because a lot of times it just, you know what I'm saying, gets into that little engineer liquidity phase. So be careful, right? Be careful, especially Wednesday morning. Be careful Wednesday morning, especially. All right. With that, I appreciate y'all for hanging out with your boy, man. As always, it's your boy Timothy Lee Rogers Sr., aka Arandia Grande. That's just Big Spot if you don't hablo Espanol. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. Y'all be safe out here in these trading streets, man. Gone.